Hello and welcome to another TLDR Global video. In this one, we're going to be taking a look at Evergrande's recent default and whether the collapse of China's real estate behemoth could contaminate not just the Chinese property sector, but Chinese government financing more generally. If you want to support the channel and get a great Christmas gift, then check out our Countries with Shoes pin badges. We have pins featuring our iconic designs, including the China pin and the global pins. The link to the store is down below. So let's get into it. We've done videos on Evergrande before, so if you want more detail on Evergrande specifically, go watch those. This video is going to focus more on the recent news that Evergrande has now defaulted on an $83 million offshore bond payment. As a brief overview, for those of you who can't be bothered to watch our previous video, Evergrande is a massive Chinese property developer. For years, it's basically been a massive Ponzi scheme, borrowing more money than it can afford and then borrowing even more money to pay off its previous borrowing. In total, Evergrande has borrowed a massive $300 billion. In September, when the Chinese Communist Party cracked down on excessive borrowing with their 3 red lines, Evergrande began to collapse. Its stock, listed on the Hong Kong Stock Exchange, fell 90% from a high of 25 HKD in June 2020 to 2.5 HKD. Now, just because a company loses value doesn't mean it immediately defaults. A default is when a company fails to pay back a loan, i.e. misses a repayment. This can either be an interest payment on a loan or what's known as a principal payment, which is when the company has to pay back the full value of the loan. For the last month or so, Evergrande has managed to make these repayments, albeit often a bit late. This is unsurprising really. Evergrande is a massive company with lots of assets, so even if it was losing money, you'd expect it to be able to repay some of the money. Even if it was losing money, you'd expect it to be able to pay back some of the repayments. Nonetheless, it was forced into some pretty extreme measures to make these repayments. They sold their company Gulfstream Jets, dumped assets at fire sale prices, and the CEO, Hui Kai-yan, was even forced to pledge his Hong Kong mansion as collateral for a new loan. Nonetheless, this couldn't go on forever, and on Wednesday, Fitch declared that Evergrande had defaulted on an $83 million offshore interest payment, originally due on November the 6th after the 30-day grace period expired. Evergrande's share tumbled to a new low of just 1.73 HKD, and their founder was summoned by the CCP. Now, we should say that Evergrande themselves didn't admit to a default. They didn't say, we're defaulting on this payment. They just didn't pay it and didn't say anything to the bondholders. This is where Fitch comes in. Fitch are a ratings agency, and their job is basically to tell investors what state a company's in. For the last year or so, they've been constantly downgrading Evergrande, basically telling their investors that their loans are going to get worse and worse. Finally, on Wednesday, Evergrande failed to make the $83 million repayment. Fitch declared that Evergrande was a restricted default, which is one rating higher than a full default. According to Fitch, this essentially means that while Evergrande has defaulted on some of its loans, it hasn't entered administration. It's still functioning as a company. Now, this is probably because Evergrande has, in some sense, deliberately missed this repayment. Essentially, Evergrande probably has more money sitting about, but under pressure from the CCP, they'll be giving it to Chinese companies and clients first to try to limit contagion in the Chinese economy, leaving foreign investors out to dry. This is particularly bad news for Evergrande because this default could trigger cross defaults on its roughly $19 billion of other offshore bonds. A cross default is a provision in a loan that says if you default on another loan, you automatically default on this loan. Essentially, the idea is that all lenders are equally entitled to a borrower's assets in case of default. It would be unfair for the first lender to default to get first dibs on all the assets. For example, you might have a cross-default clause on your car loan, which means that if you default on your mortgage, you automatically default on your car loan, and then your car dealer and your bank get equal dibs on your assets. Anyway, most international bonds have cross-default clauses, so it's likely that by defaulting on this loan, Evergrande will have defaulted on a whole load of other loans, and you can expect foreign investors to start filing legal proceedings against them. So, what happens next? Well, the big question is if Evergrande's woes will affect the wider Chinese economy. Evergrande's collapse has already hurt other Chinese property developers. Fantasia and Sinic have both missed repayments, and Casa was also downgraded by Fitch to restricted default after they failed a $400 million offshore debt deadline. This is both because Evergrande has shone a light on Chinese property developers' unsustainable debt-fueled growth models, and also because Evergrande's collapse has spooked consumer confidence in the property market. The Chinese public doesn't want to buy houses pre-constructed, as often happens in China, because there's no guarantee they'll even get built, and this has significantly hurt property sales. But the bigger worry for China's economy and the CCP will be the effect that Evergrande has on local government debt. We're not going to go into this in too much detail, but essentially, since 1994, local and provincial governments have been responsible for paying for their own social services and meeting growth targets set by Beijing. Unfortunately for them, most taxes go straight to Beijing, which means they're underfunded and they're not technically allowed to borrow money. To get around this, and to make sure they meet their growth targets, local governments set up local government financing vehicles, or LGFVs, which were basically shadow companies. Local governments would give those LGFVs land for free, and then LGFVs could use that land as collateral to borrow money. Investors knew that they were basically lending money to the local government, who had loads of expensive land, so they were pretty happy to lend money at relatively good rates. No one knows precisely how much money local governments have implicitly borrowed via these financing vehicles, but whatever the exact figure, it's probably too much. Upper end estimates put the total figure at about 30% of local government revenue, and a total of 30 trillion renminbi, nearly 40% of GDP. Even before Evergrande, they were showing signs of strain. In July, a regulatory directive known as Document 15 went out to banks telling them to stop loaning money to LGFVs, but the collapse of the property sector could be their death knell. Local governments rely on land leases for most of their income, and LGFVs rely on land values to borrow money. If the Chinese property market dries up, local governments will see their revenue streams dry up and borrowing costs increase, leaving them unable to service their already inflated loans. This could trigger a wave of defaults across local government, which would amount to a full-blown economic crisis. Worryingly, LGFVs have already started buying land from local government. From July to November the 15th, LGFVs accounted for about 13% of all land sales, land by value, up nearly 5 percentage points from the January to June period. This is essentially an accounting trick by local governments. They borrow money from banks via their LGFVs, then buy their own land with that money so that they can pretend to Beijing that their loans are actually revenue. This essentially shows that LGFVs don't have enough income because they're struggling to sell land, so they're using an accounting trick to pretend everything's fine. Anyway, you get the point. Evergrande is defaulting, and the company's collapse could affect not just the over-leveraged property sector, but the over-leveraged public sector, accounting to a full-blown debt crisis. Now, we should say that no one knows how things will play out. We're just describing some possible risks, and maybe the CCP will find some way to control the contagion. Nonetheless, these are real risks, and worth keeping an eye on in the future. But what do you think? Will the CCP be able to control this, or is Evergrande's recent default proof that things are really going downhill? Let us know your thoughts in the comments below. And before we finish, remember that if you want a quick gift for yourself or a friend ahead of Christmas, then check out the store. And this might be your last chance of Christmas delivery. The store's linked below, and your support directly helps our journalism. So, thank you.